We were 38 million of revenue. You fast forward 12 years, we're almost 5 billion now.
Today, I'm with Greg Williams, founder and CEO of Acrisure. Greg, how are you today, my friend?
Great. You're doing great, Al. It's great to see you. It's great to connect and catch up and do it in a forum like this is kind of fun as well.
Oh, it's going to be great. So Greg, I'd like to start, way back when, 2013, when the phone rang, and it was one of my mentors, and I know a great friend of yours, John Adio.
Oh yeah, I remember John well, and John was part of our first investor was Genstar. John was part of that, was on our board, and I started talking about M&A opportunities, and hey, we're going to go build this thing from an M&A perspective. So, John, who should I talk to? And your name was the first name he gave me. He says you got to talk to this crazy guy in New Jersey, Al Sica. And so you and I connected, and the rest is history. So no, that was it's fun. John is a mentor. He's a mentor to many in the industry. He's a great guy, and so
the best. Yeah, I'll never forget the day he called me. He said, you got to meet this guy. He's a great guy, and you and I hit it off immediately. And you start describing this model. And this is my 37th year. For probably 25 of the 37, really the buyers or the investors were public companies or super large privates, and it was very corporate. So here comes Greg Williams. You start describing this model, and I'm like, Greg, this is ingenious. You had this model that was really going to cater to the entrepreneur. And you said you evaluated the industry in 2004 before you started Acrisure in 2005. And it was amazing because, when thinking about it, I'm saying to myself, this industry is full of family businesses and entrepreneurs. And when they're being sold, they're selling to corporate. They're becoming corporate. It was kind of a little bit, as I would say, ass backwards,
yes,
the way it was being done. And you figured that out.
Yeah.
You really said to yourself, you know what? I'm going to change this whole mantra. And this model you created, the power of the partnership, was to really have these people aligned. And the way it aligned them was that they continued to feel like owners and shareholders, which they were, with this small piece of equity you were using, both in the closing payment and then also in the earnout, that they felt they were part of it. And I said, Greg, the industry is going to eat this up. They're going to love this. I was starting to get my ducks in line with Mike Fletcher. He had Ray Somerville as well, who are my two partners now. They were going to leave Hales. And you were working with them too. You just started to work with Mike, and he was at Hales, and he was making this exit. You and I were getting it together. He was getting it together with you, and I was getting it together with them. And we all brought it together at the same time in 2013. And obviously, we were able to succeed with the first transaction you did with the Genstar Capital, right? July 1st is coming up. It'd be 12 years. July 1st, 2013, with our friend Gary Taffet, who is an awesome guy, awesome salesman, obviously was a big politician in the state of New Jersey. And that turned a lot of people off on him because of his political connections. And you were the only person that said, well, I want to meet these guys. I said, talk to Genstar, tell him this guy's, a rock star. And Greg, you did that deal, and today it's probably still one of your better deals.
Gary's still crushing it. Yeah, he, those early days, you sit back, you think about, because 12 years ago, really, it doesn't seem like that long. It feels like 3 lifetimes ago. But we were 38 million of revenue. You fast forward 12 years, we're almost 5 billion now. We'll hit 5 billion by the end of this year. And so when you look at all of that, it is kind of fun to reminisce and how it began and how you were chief cook and bottle washer at the time, doing anything and everything you had to do to build a business. You were doing the same thing. I was doing the same thing. And just a lot of fun as you start thinking about those formation and formative years. And so, that deal, that got done. And I don't know how many deals we've done together, but I know it's well over 100.
Yeah, sure.
And so well over 100. And so that was the beginning. And you say your business grew, our business grew, and we had a lot of fun doing all of that together. But the characters that we have and the people that we have, and I say characters, I mean it in a good way. we have some good characters and some good partners and good people that are a lot of fun. And we met a number of them through you, and so it's just been a blast. And I do feel bad that over the last couple of years, I've been less available to spend time, go out and visit and so forth, and I feel bad about that. It's part of, I guess, you get busy and you grow and you do the things, you just get
Oh yeah.
kind of get diluted. But it's been tremendous working with you and the team. And I remember actually when you just said that, Mike Fletcher, and the conversations that Mike was having with me at the time about, hey, do I do this thing with Al Sica and all that. And 12 years later, that's still going strong. So it's kind of cool to see the whole thing. Trip down memory
Oh,
lane.
it's been crazy how we were all rode side by side and all came together. And as I told you, when we talked yesterday, preparing for this, I said, Greg, people would say to me, now you're Acrisure, right, Al, in the early going, and I'd say, no, I'm Sica Fletcher, but we did so well together, and you really, Greg, this model has really revolutionized the industry as far as the real level of private equity interest in this space, because how well you did in such a short period of time. Okay. And I remember, July 1st, 2013 was the
Yep.
first deal. And then I remember November of 16 when we brought in Abry to help do the management buyout. And that was, 3.25 years later, here we are. And this business went from, like you said, 38 million of revenue, 10 of EBITDA. That sticks in my head when I tell the story.
Yep.
And today up to 5 billion, and a billion five, whatever you are, 2 billion of EBITDA, close to. I mean, no matter what you've done and what you are going to do, building a company of this scale, you're doing something right. And I give you great kudos, because you probably sitting back when we started this in July of 2013 could never have forecast 12 years later that this thing would be where it is, where you've gotten such notoriety in the market. But I give the credit to, and all the pitches I have with any of our new clients, when we get into the point where we're going to go to the market, okay, I always tell them that Greg Williams, okay, is the guy I give the credit to that really created this model, okay, that changed the industry and got private equity so involved and so excited about, investing in this space.
Well,
All right.
it's
And
very
it's been
kind
a
of,
great run.
yeah, very kind of you to say that. And it is fun, and I do take it as a compliment when I hear, the new company coming in, and they, they're out telling the marketplace that we're going to be the next Acrisure, and all that. And people say, well, does that irritate you, or that frustrates you? I said, no, frankly, I take it as a compliment. And so, uh, it's been fun. You know what? And I'm one of those guys, Al, that as you see the proliferation of capital that's in the space over the years, people will ask, who do you respect and who do you like and who do you not like in terms of competitors and peer groups and things of that nature. And I truthfully have always said it and answered it this way, because it is the truth. I'm actually one of those that anybody who's in the space, I actually root for. I hope they do well, because I think it does. If everybody does well, then it just gives the confidence to a marketplace, a capital marketplace, that just comes to this place, this industry and this segment, with the idea of getting great appreciation of value, but also consistency of performance and predictability of performance. And that to think that you know fintech business today, but at that time obviously building and focused on building an insurance broker, that's where you can go as an investor, as a safe haven, but also get great returns on investment. I mean, that's a good thing for everybody. And so I actually have not rooted against anybody. We obviously compete with a lot of people, but root against them I don't, because you really you just don't want to see any kind of uh, failure or anything that or lack of success, because it does kind of taint the industry as a whole. And so it's been fun to watch. Again, I've taken it more as a badge of honor and in a flattering moment more than anything else. But it has been fun to watch. And you think about the model for us, it is something that's evolved. In that, back in those days, we were buying businesses, and obviously they're operating under their own brand and all that. And 12 years later, here we are doing deals that we're on the other end of the spectrum, where we're doing deals and we're fully integrating and consolidating and branding, rebranding, and things of that nature. So we've kind of come full circle. But given size and scale and what we're trying to do overall, it's kind of a natural thing for us to do. But we had an unbelievable, call it 10, 11 year run where we did, over 900 acquisitions in 12 years. It's about I think 940 or something like that. So
Wow.
it's a lot of deals in 23 different countries, every state in the United States in 23 countries, and so it's a very global business right now. But it's been unbelievable. And again, you think back, as I'm sure you do the same thing. You think back about who helped you along the way, and who influenced you, and if the road twisted or turned, a different way, how things might have turned out, are things that I think of. And again, the very good fortune of meeting you. At the time, you were getting very aggressive and intentional about building your business, and it just worked out both beautifully for both of us. And Adio's part of that. Mike Fletcher's part of that. There's a whole Ray Somerville's part of that. There's a whole list of people that were part of that. That's just you know when I'm gone or done, whatever that is. Hopefully, it's a long time from now. It's those will be the things and the names and the people that I think back and just realize because of them we're here, and you're a big part of that.
Thank you, Greg. I mean, listen, I feel the same way, and it's funny you say that because the type of guy you are and the type of person you are. I know you built this model really with the meaningful for people and the shareholders and that equity, but people don't realize that does a couple things. It aligns everyone to work together,
Yeah,
right? That cross sells the powerful thing to help that organic growth, which we know now is a big sticking point with any investors or people putting any further money into any of these things. And then, of course, that creates what I call generational wealth for these people that they know they never would have had beyond, because it's not just what you get at closing, it's what you get on not only the stock appreciation, but also for 3 years, with the earnout,
yeah,
which is, where you individualize yourself on your own growth, because the cross sell helps that, the sharing of revenue. But it's funny that you say, that you're rooting for everybody. Like I said, I don't really pay attention to what everyone else is doing. I pay attention to what I'm doing. But none of us want to see anybody go bad because that hurts everyone. But along the way up between what we were doing with you and we were doing overall, and you were doing with overall and with us, we both had targets on our back.
we did.
Okay, which was we used to talk about all the time, and it was funny because all we kept doing was putting our head down and doing more and building and building. And I like to say that it was, we were very focused on what we were doing and doing it well. But it was funny how it all evolved. We all came together. Now here's Sica Fletcher, 12 years down the road, totally different look than it was then. Here's Acrisure. You were the entrepreneur, de jour, pioneer of this model and pioneer of the decentralized model, right?
Yeah,
That was the thing that really jumped out of the page for all these entrepreneurs. Hey, we're not going to change our name. We're not going to change this. We're not going to change that. We're not going to change it. We can kind of run the way we keep running, but we have a big brother now that's going to do things to make us better. And now it's funny, 12 years later, that decentralized model no longer flies.
yeah,
So you've had to shift gears, and while you're still growing this thing robustly, you had to shift gears multiple times, including when you kind of went towards more of the fintech
yeah,
route, as you said, with the deal you did. And the funny thing was with Thomas Tull, the first guy that Brent came to me with was Thomas Tull. And he didn't even want to introduce Thomas to you at first. He wanted me to introduce him to someone else who, at the time was about a $50 million broker in California. And I said, why don't you just introduce him to Greg?
Yeah.
And yeah, I think Greg would be all over this, and that really jump started you on the fintech side, which I know you're proud of, and it changed the whole focus of what Acrisure was, not just the insurance broker, but maybe you speak to that a little bit, Greg, about
Sure.
the evolution that you took up to that point to get to where you became fintech.
Well, the journey is you're forcing me to relive here, and I say that in a good way. It was quite an interesting process in the sense that every deal we've done, 900 plus transactions we've done to this day, even 100% of those deals have been done with equity as part of the consideration that was paid. And so you hit on the key term, alignment. With that alignment, we did get not only people to join the firm, and yes, they kept their brand and all those things, but what people, I think, from the outside looking in missed was just how strong that alignment really was. And so when we did things like in 2020, did the deal with Thomas and Tolco, and it made a $400 million investment in an artificial intelligence platform in 2020. It's not like today where everybody's talking about AI, AI, AI. No one was talking about it in 2020. And so when we pivoted to that, that was a deal that actually required shareholder approval. And because of the type of transaction it was, I won't get into the details, but we had to go out to the common equity to get a vote. And so when we did that, this is all during COVID, it's 2020, 96% of the shares voted in favor of doing that transaction. So what it showed to everybody then, it still does, frankly, to this day, is just how aligned this was. So yeah, everybody had their brand names and all those things at the time. But when they saw 96%, I don't know if we can get 96% of the people to agree today's Friday. But we got
Right,
96% of the people to agree to do a transaction that at the time, because it was an all stock deal, was dilutive in terms of their equity holdings. But they saw the strategy and the transformation that it was going to bring. And as a result of that, and it wasn't as 4% voted no, as that 96% of the shares voted in favor of, 4% just didn't vote. And so we didn't have anybody vote no. And so that's where all of that we started positioning the business, and it really comes down to Al. I think a hyper focus on our clients, because if you look at all these transactions that we've done over the years, what we have is a client base that is decidedly and predominantly small to middle market. And so if you look at we got approximately 7% of every business in America is an Acrisure client. If you look at those businesses, 98% of them have 100 employees and less. And so when you look at that and who owns those businesses, they have lots of needs way beyond insurance. And that was something that we started learning after we started getting all of this insight and data and information about the marketplace through this AI platform, and started doing predictive modeling about who's likely to buy what. And when we had the technology platform making predictions, and we'd go out, and then because we weren't selling anything other than insurance, we'd go out and give a referral to a payroll company or a payment processing company or a wealth management firm or a cybersecurity firm. As we were going out and providing those referrals, they were closing at a really high rate. And I said, "Look, this is kind of, we ought to be learning something here. Our clients do, in fact, want and are buying these products and services. For the most part, they're non-discretionary products, just like insurance is. And so, at the end of the day, why aren't we, being, truly a trusted advisor to our client and bringing them the product and service solutions that they want, whether it's insurance or something else? Why shouldn't we be that party?" And so that's what started the journey for us, and the pivot from insurance brokerage 100% to a fintech business that's got insights into the marketplace. I mean, the technology platform's 200 billion data elements of information. It's over 1,000 attributes on information on 6 million businesses in the U.S. And so we know who owns what. We know what they do in terms of those companies. We know the profile. We know how many employees. We know the product and services they're likely to want and need. And so with all of that insight and all that intel and that data analytics and information, it gave us an opportunity. That transaction in 2020 gave us an opportunity to kind of reimagine ourselves as to what we could do, and frankly, what we could become in terms of the size and scale of the business is just dramatically larger than somebody's going to just stay in the insurance brokerage lane. And so for us, that 2020 transaction was transformational. It changed the game for us in a pretty dramatic way. But having said all that, insurance brokerage is still our core. It's still the foundational component. It's still what we do more than anything else, and it's the kind of the fundamental foundational component that we have. And so, all to say, those are the things that kind of is what's changed for us in the pivot. But the genesis of it really goes back to that alignment. Is you can't go do all those things and have this kind of enthusiasm and embracing of a strategy change if you don't have a highly aligned shareholder base. For us, we had people advising us, some investors saying, stop offering the equity, just go to an all cash deal. I said, I don't think you guys understand that if you look at, approaching 90% of all this M&A we've done, approaching 90% of it's all been on a third party referral. Or I'm sorry, a proprietary referral, not a third party. And so, all to say, those are the things that we've just seen that the manifestation of and the benefits of as a result of that one word alignment, and it's allowed us to go build something that's very unique and different, and now technology underpinned and selling other products and services as well.
Well, it's interesting you say that because as people have followed this model, your blueprint, and now what's there, 40 to 50 private equity backed brokers now. Okay. Um, they also kind of followed that what we call these things at Sica Fletcher is growth strategies, right? And what's unique is when you kind of made that move with the fintech and Thomas Tull, which showed that you were not just insurance brokerage anymore. Many others continue to follow, and we have been selling all kinds of stuff. Almost anything you outsource,
Yeah.
you were outsourcing, now can plug into these things: tax advisory firms,
Yep.
actuarial firms, auditing firms.
Yep.
I mean, everything and anything can plug in, and it all goes back to the alignment.
Yep.
Because now you could say, hey, maybe if you were in construction insurance and you were outsourcing your surety, hey, we bring a surety guy in. And guess what? You can give him a lot of distribution from your partners because everyone's a shareholder.
Yeah.
Everyone's rowing the same boat. That alignment has created, unbelievable success in the cross sell. Okay, that you never would have, normally. And why most banks failed when they bought all these insurance brokers, and we were on the front end of a lot of those, Greg. I don't know, we didn't know each other back then in the mid 90s, early 2000s, but I did a boatload of those bank deals with large platforms, 20, 30, $40 million revenue shops were their first ones in. And everyone just thought the cross sell was going to work so great, but they didn't see there was no alignment because the lenders, they never got paid commission
Right.
or anything. What was their incentive to open their customers up unless there was something in it for them? In your model and the model that's out there now with all these private equity backed growth strategies, that sharing of revenue,
Yeah.
going back and forth, is a huge creator of the cross sell. I mean, it's been unbelievable how it's worked, and as you know, and I've learned the hard way with all the recapitalizations we've done. Any investor now, what they want to see is that it's working. Everyone knows you're acquiring.
Yeah.
Right? Everybody knows you're out there acquiring, and that's how you're growing so fast. But they want to see it work. They want to see the cross sell work to create the organic growth. They want to see that it's integrated, that it's all being put together as one. And that's what's really changed. Okay. And it's kind of affected some things that are going on in the marketplace right now,
Oh, yeah.
with some of your peer groups.
Yeah. Yeah.
Right. Because, so sizable multi-billion dollar companies who never were basically built to go and sell to a strategic or a public are now at the point where no longer you can bring in that one private equity investor without having multiple ones, which kind of takes away those 3 to 4 to 5 year flips when you triple, quadruple,
Yeah.
fivefold the value of the stock. So to stay private becomes much more difficult, and to go public becomes much more difficult. So here we are, most recently, look at the Gallagher Assured deal. Gallagher speaks for itself, great company. Assured, know the founders very well, great guys, great successful company. But here they are looking at each other and saying, what do we do now? And their alternative is now to go back to a public, which almost has created a little bit of a cycle, I think,
Yeah.
like a cycle, because, the model that you created and others have followed really, made it more difficult for the publics to compete on that little piece of equity that was really creating that wealth. But now it seems like it might be coming back to them at that level. So, some of the things we're seeing, rumors about certain things with risk strategies now, which, I'm very close with Mike Christian. He's one of the best friends in the industry. If I've been doing this 37 years, I know Mike 36 and a half. What a great company they are. But now they went, out and, found out that not only the values weren't there, it's like kind of being a reset, it seems.
Yeah.
Okay. At those, anything over maybe 300 million of EBITDA seems to be looked at almost like a public. Bottom line is, it's interesting what's going on out there. How do you see the marketplace right now, Greg, from a standpoint of what you're seeing with some of these transactions that are potentially pending?
Well, what you just described, I think, is a real dynamic in the sense of uh, if I were advising somebody, which I don't, but there's a size and a scale of which you can be you can exit and get away. And I'll say get away with a model that's very decentralized and so forth. And there's a size and scale where you can't, and really where you start getting to be so material in terms of your size and scale as a decentralized company that to go into even a sizable strategic, it's a noteworthy transaction in terms of valuation, and then you got to operate. Whoever buys it has to operate the business, and so you do have, I think, this kind of this level of or precipice of which you can stay private and do what you're going to do. To your point, at a certain size, do you get the maximum value in that environment today at a scaled platform? The evidence in the marketplace would suggest it is harder to get. The bigger you get, the harder it is to get the upside
Yes.
market. And so for us, recognizing that pattern and never really focused on anything other than ourselves anyway, it was one of those. You know what? If we're going to preserve optionality and for ourselves, if we're going to preserve optionality, either public or private, either one, there are things we've got to go do in order to position ourselves to truly preserve optionality, not just have it be, some words that you throw around, but truly to preserve optionality. So last year, we started branding. Let's see, 2023. We started at the end of 23, 24. We branded our businesses in North America. We're branding our business now internationally in 2025. Did all of that and started integrating, consolidating. Last year we did 611 system conversions. I mean, a crazy, insane number. But I just said, look, if we're going to integrate and consolidate, brand build, and all those things, then if we're going to do it, it's going to be painful. And if it's going to be painful, I want to get it over as fast as I can. And so, because there's thoughts, let's do this over a 3-year window. And I just said, the hell with that. I don't want to do it over a 3-year window. Let's just get it over with. So 611 system conversions last year. We're wrapping up the rest of those, kind of the first few months of this year, and kind of getting through all of that. And so, yeah, basically in North America, we're fully integrated now as we sit here today, 425 locations down to 4 regional platforms. And, international, the business is already kind of built in a way that was already fairly centralized by country. We just had to do the rebranding piece. And so we're doing all that. But anyway, to me, there wasn't a next step for us. It was, look, we're either going to stay private as a big private company, or have the option to do something in terms of the public markets at some point. And so this was just the right step, and the thing that preserved that optionality to the best is just do all that work ourselves, put us in a position to do either, depending on what the market conditions are and all of that. The size of the company we've got right now, at some point, it's probably, this is likely a public company at some point, but no declaration, no time frame, no nothing else in terms of what that means or when. It's just, again, we think that kind of recognizing what you pointed out is that at a scaled platform, it's going to be hard to monetize at the value that you think you maybe deserve based on size and scale. That used to be true. It's not so true anymore as we sit here today. So that's why we're doing what we're doing. And on brand building, I'll tell you that word alignment comes back on the brand building too. I'll give you an example. In 2022, June of 22, so actually 3 years ago from right now, if you statistically said what percent of U.S. households could tell you who Acrisure is and what we do, statistically it was zero. I mean, absolutely zero. We did the deal with the Steelers and put our name on an NFL stadium in July and August of 22. And this next statistic I'm going to give you, people attribute it to that. It's not actually what causes it. But fast forward 3 years, 18% of businesses in the U.S., 18% of them can not only tell you who Acrisure is, but they can actually tell you what we do. And that isn't because we put our name on a stadium. That helped. But it's all the digital impressions. So we did 1 billion digital impressions in 2023. We did 700 million in 2024. We'll do another 700 million digital impressions in 2025. So we're educating the marketplace as to who we are and what we're doing, the product and service offering that we have. And so as a result of that, we're creating this unbelievable awareness. And so what's happening inside Acrisure is rather than go to our partners and say, hey, starting next quarter or next month or next year, we're going to rebrand all of you, and you're going to take the Acrisure flag and probably carry it going forward. They actually started seeing the thing that we did with the Steelers in 22, the digital impressions we started doing in 23, and we actually had this groundswell of our folks, our operating partners, coming to us and saying, hey, with all of this that you're doing and creating some awareness around Acrisure, we'd like to take advantage of it. And for us to take advantage of it, we got to change our name. And so it actually got to the point we had 50% of our businesses wanting to change their name to Acrisure and forsaking their brand. This all kind of happened organically and decided once we got to a tipping point where the vast majority of the businesses wanted to change their name, we just did it. And so that's kind of how that even happened. It wasn't a forced thing. It wasn't, hey, we just decided we're going to do it. It was really the momentum that was building inside the company created. So that word alignment just keeps coming back in terms of its importance. Just keeps coming back as it relates to, because we were so aligned, they saw the benefit of what was happening in the brand building, and they wanted to adopt and use the brand. And so it's just been kind of fascinating to see. And to your point of valuation and models, we've evolved. I think scaled platforms are going to they're going to face the same thing we were faced with. You can either continue in a private setting, maybe not get the value that you think you deserve, or take the heavy lift. And it is a heavy lift to get prepared to be a public company and have that optionality. It's 611 system conversions for us last year, as I mentioned. And so all to say, we recognized it, did that pivot again, kind of started in earnest about 18 months ago. And it's all, part of the journey. So we're, now in that camp of, some people describe us as a strategic because we're kind of, permanent and not going anywhere. I mean, the business is still 73% owned by people who work in it every day. So we got outside investors; they only own 27%. So
Right.
it's fun and all that. That journey's been unbelievable. And again, what I just described sounds like it was 25 years. It was really the last 10 in terms of most of that progress. But it's been fun.
Well, it's interesting because, Greg, if you listen to your peers, and I'm not suggesting just the larger ones, but even some of the smaller, ones that have kind of followed the same blueprint that you laid out, it's interesting to hear them when we run these processes for these sellers every week, and they come in and they make their pitch, and every one of them comes in now and says, we're the ones that are the most integrated, and I just laugh because none of you, I think, are 100% integrated. And to be honest with you, I'm not sure if anybody will ever be 100% integrated, including even some of the publics.
Right.
Okay,
Right.
I mean, I think it's really hard when you're continuing to add people and firms and whatnot to have the ability to just integrate it overnight. It takes time.
Yeah.
It takes time, and things change. The market changes. You know, the investors' mentality changes. So really, some of these ones that are integrating sooner, a lot of them say, "Well, we're not waiting till we're a multi-billion-dollar company to integrate." Well, yeah, because you're not a multi-billion-dollar company, and you're a lot smaller. And yes, you're doing this because this is what the market is pointing at now. Okay, because that's what you need to do. But listen, I mean, I think that for the way these things happen, and I've been through 37 years worth of cycles, right? Through the stock market crashing, okay? Through the pandemic, okay? And I like to think that we're somewhat more than just deal makers. We're pretty good business people, Greg, and we're kind of go-to guys. I mean, I
Well,
remember one day when the pandemic was going and no one was leaving their house and nobody knew if it was a weekend or a weekday anymore. I spent, I think, a Saturday for about 10 hours on the phone with almost every major CEO asking me, what do you think's going to happen? And I said, what do you mean? And they said, what's going to happen to the market? Like, all they want to know is the value's going to come down because of the pandemic. And I said, how would I know? Why would I promote that? The money's not gone.
right.
Okay. Everything's the same. In fact, we did a recapitalization right in the middle of the pandemic in March of 2020 with PCF, was now called Trucordia. And I remember one of the big private equities called me, said, this is amazing. How'd you do this? I said, nothing changed. The money was always there, right? I mean, nothing really changed with the financial picture. It's just people want to take advantage of just things when there's a disruption in the world or the market. People want to take advantage of that. And I understand that. But, it's so funny because, you can, if you want to be negative, and this is what I tell people, and I love the people that come to me when we're just doing a normal deal, and the first thing they do is point out all the negatives. You know what I do now, Greg? I stop them. I say, no, hold on a minute. They said, well, what? I said, let's go through all the positives first, and they're tongue tied. Whoa, whoa, whoa. I go, come on, I've been doing this too long. It's a negotiation tactic, and I know these folks out there now, these investors so well. They could say two words, and I know whether they're going to do something or not.
Yeah.
It's just basically, kind of watching what everyone's doing and seeing. But it's just funny to hear everybody say this, and they think it's so easy and so simple to do all this. It is tough. What you've done to get to the size and scale. And, the bigger you get, the more people you got to listen to, the more people you got to deal with, the more problems you have. Even at our size, and we're small, Greg, we're small, small, small. But even adding people to us, it's more personalities. It's more
Yeah.
who's a naysayer, who's going to be a positive, who's going to be a negative. Why do I have to watch that? And, I know how you feel. We're both the same age. I'll be 64. You just turned it in August. I'll be 64. At this stage of your life, you just want to keep rolling and doing the right things and working with the good people around you. And I think you've done that, Greg. I think, you got a good following of very loyal, solid people. I know we've put, quite a bit of them in there in the early going. Some of your leadership
Yep.
are people that we brought to the table, which, makes me pleased. But, listen, as far as the market's concerned, I mean, I think it is what it is. I think it'll shift multiple times. But like I say to everybody is there's someone for everyone. Okay. There's always someone for everyone. And if someone wants something bad enough, they'll do what they have to do it. It's just how you present it and how you position it. And I think one of the things that Acrisure you've really done, Greg, is not only really set the bar for all the others, with the model and whatnot, but and change the industry. But I think you were one of the first ones out of what I would call the privately held growth strategies that did really get a recognizable brand. nationally.
Yeah.
Okay.
Yeah.
And whether it's putting the name on the Steelers Stadium or whatever, like you said, so it's not just one thing; it's a combination of everything. And I kudos to you on that. It's not easy to do what you've done, no matter what anybody thinks or anyone says or anybody is constantly looking at the negatives. Right? It's easy to look at the negatives. We could always do that.
You know what? It's you just said something. The more I talk to you, trigger more things from the past and lessons learned. But in 2020, when the global pandemic hits, um, we closed a deal, a financing deal in 2020. Uh, in 2020, we did over 100 acquisitions in 2020 during the pandemic.
Right.
And so I was getting the calls that you were getting, and it was more from our investors saying, "Hey, what's this going to mean? What's the landscape going to look like in terms of how the landscape has changed? How is it going to impact your financial forecasts and so forth?" And like everybody else, we got hit in 2020 with in terms of revenue, but the whole idea was when everybody else was kind of hunkering down, we said, look, we know exactly what we're looking for in terms of targets. We know what gaps we're trying to fill in terms of product and service offering. We know the geographies that we want to be in. It's business as usual. And so, actually, during the global pandemic, we doubled in size. During that, we went from 2 billion to 4 billion during the global pandemic. And so, I think part of it has to do with that mindset you just referenced: is that look, you can be negative or you can be positive. The one thing I do know is this: if you look at the product that insurance, you stick with that product for the moment. It's a non-discretionary product. People have to buy it. As long as their business is in place, they might not buy as much today as they did yesterday because what's going on in the macro environment or a global pandemic or whatever. They might not buy as much, but they're still going to buy your product. Well, cycles come and cycles go. So if you can just stay focused on building your business and attracting the right people and the right talent, the right products and services, you knew it was going to come back at some point. Now, it might be 2 or 3 years, which it turned out to be, but we come out the other side in just a tremendous place because we stayed positive and didn't run and hide. And actually, our largest investment that we've ever brought on came to us during COVID. And the reason it came to us was how we handle it, which is we stayed focused on growth. We did, button down the hatches in terms of, managing margins and making sure that our leverage profile didn't get out of whack. In fact, we actually delevered the company during the pandemic, um, while still doing 100 acquisitions plus. And so it was really just kind of interesting to see is that everyone was kind of running for the hills and we just stayed focused on it. And when it was all done, our people were like, hey, you know what? That wasn't actually as bad as we thought it was going to be. And our investors were definitely very happy about the whole thing. But that you can choose to be positive, or you can choose to be negative. That has a lot to do with where you end up in life. So
Yeah, it's a mindset thing. It's a mindset thing, Greg. And my mindset is always to just keep going.
uh,
Right? The Energizer Bunny, right? Like, get out of my way. And, I'll try to figure out what next is going to work.
yep,
Right.
yep,
And that's what we did. But it's funny you say that because, 2020, listen, insurance brokerage is the best kept industry. So secret of an industry in the country. It's high margin. It's residual. You need the product by law for most of it. Right. It's recession proof for argument's
yep,
sake.
yep,
Right. So, that's why all these money guys, all the private equities love it.
yep.
It's sticky, right? It's continuous, but think about it, Greg. In 2020, and we had a pretty big 2020 as well, okay? But just the next year after that, 2021 was an aberration for all of us. We did 163 deals in 2021. Why? Because everyone thought the capital gains were going up in 2022,
Yeah,
right?
yeah.
So everybody, we did 34 deals in December of 2021. Okay, I thought my people were going to have heart attacks and or quit or whatever. We got through it. I sat at my kitchen table after day after Thanksgiving. My sister-in-law is one of my assistants, and we mapped out every one of these deals going into the last month to make sure who's got the attorney, where are we here, where are we there, to get them all done. And right down to the end, to the wire, we got them all done. But think about that. Within a year, this panic of what's going on. The next year, there was this huge influx of deals done because of the capital gains scare, which the capital gains never went up. Okay. So we did all that. I said, never again. I don't care what they say, but it's really cool to hear you say that because, yeah, I mean, I see it the same way. And so you really don't think from what's going on with your peer groups in the market before we shift gears here, because I want to talk about some of the recent things that you're doing that have been in the publications. You don't really, I'm concerned. You're staying the course with Acrisure. You're not panicking about, the values or anything of that sort. You feel very comfortable that, you're going to stay on the course and whatever it is, you're going to do it. You're not going to be influenced by what's happening with some of these others that are, the multi-billion-dollar peers.
Yeah, no, that's exactly right. I mean, markets come, markets go, cycles come, cycles go. At the end of the day, for me, it's always been about us. Stay focused on what we're doing. We have a strategy, we have a game plan. We're always thinking 3 years ahead, and in terms of what do we want the company to look like 3 years from now. And if you stay focused on that, what's happening day to day today is a lot less relevant than now. If you're focused on this month, this quarter, this week, today, then yeah, you can get kind of shook up by what's going on in macro environments and you know what's going on in world tariffs or whatever the next issue is that people want to focus on. But for us, I mean, this is just a business and an industry that if you look at again our client base, which I reference, they have lots of needs. The vast majority of them are non-discretionary. As long as they're in business, they're going to have these product and service needs that we're going to continue to offer. We're going to just stay focused on that. Keep thinking about 3 years from now, investing in the business from a technology standpoint, thinking about 3 years from now, and stay out of the quagmire of what's hot and what's the latest fad or the latest news cycle or whatever. And so that's kind of how we've approached it, and it's worked out. It's worked out pretty well.
It's a great industry. It's funny. So before we shift gears, someone said to me last week, and it really makes sense because, you know, there's so many insurance brokers out there out of 40,000 that we have in our database. There's only about 1,500 over 5 million left.
Yeah.
So you have still a bunch of the mom and pops out there. And someone said to me, this is a great business if you're lazy. It's a phenomenal business if you're motivated.
Yeah, right.
Right.
Yeah.
And all of that has to do with the residuals. They're the good and the bad, right? It's great to have them. There's a lot of people. Hey, you're the local insurance agent in town. He's the barber. He's the hardware store. They have coffee together. And that's how people survive. They could be $1 million in revenue for 80 years and from great grandpa to Sonny to Sonny Jr., and they play golf 3 times a week. And, they have the same CSRs for 25 years who go to get the mail and make the coffee. And I mean, that's your industry. That's what it is. So, someone like yourself who, was not an insurance guy coming in, which is unique in its own right. You were, an investor in different segments. And I always tell the story about how you had to look at the industry or cut the girl from the basketball team, right? Right. And you had to make that decision. That's why you started looking at insurance brokerage. And listen, it was a good decision, Greg, because look where you are today and, and where you've gotten. But anyway, you've done a couple recent things lately that have hit the marketplace. One is, another influx of capital from Bain, who, if you remember way back when we were going to do the management buyout, I had brought Bain in, and they actually made a pretty good offer at the time. Okay. I think it was 12 times. Okay. That was like, oh, wow. Greg, 12 times, right? But you had your mindset on, not wanting that route. And you were very, very deliberate in what you did when we did the management buyout and whatnot. But, another influx of capital from Bain and what that's going to do for Acrisure right now. I think I'd be curious to hear what that's going to do for you right now. And then now, just recently, the acquisition of Heartland, the payroll company, which, obviously goes along the lines I shoot with that constant, continuing to be not just a insurance broker, but being, one-stop shop. Okay, to cross sell, et cetera, et cetera. I'd love to hear, and I'm sure everybody else would, what those two events, mean to Acrisure at this point.
Well, so we ended up with a $2.25 billion capital raise, and it was go back to this theme of preserving optionality. Is we had some portion of our capital structure that was in a preferred equity that was not necessarily convertible. If in fact we decided to go public, it wasn't mandatorily convertible, so we refinanced a portion of that pref with another pref that replaced it with another pref that is mandatorily convertible. And so again, back to preserving optionality and just taking and focusing on the capital structure and optimizing that. And if you think about optionality and having optionality, so that was the kind of the intent of doing that. And then also having some dry powder for M&A and strategic M&A in particular. And so that accomplished, and we didn't necessarily expect all those two transactions to close within 2 weeks of one another, but they did. And that's the one thing we achieved, and it was Bain and and others that it's,
Right.
in the press as far as who was all part of that consortium, but led by Bain. And so a great group, blue ribbon panel of investors in terms of the names and so forth. I mean, it's a great group of investors. I think validated a lot of things in people's mind, and not just valuation, et cetera, but also the strategy and what we're doing, because they see and understand what we've done from a technology investment and what capability we have, and then also the what that transaction, the Heartland transaction represents in terms of opportunity is it here's a company and a platform that's done very well in their own right. High growth, high margin business. That if you look at our client base and what we've already referred to the marketplace, I mean these are north of 50% closing rates on 1,000 referrals, and it's like, well, hold on, if we can identify this opportunity inside our client base, refer them to nondescript payroll relationships that have nothing to do with Acrisure, no brand familiarity or consistency in any way, shape, or form. And then certainly, if we own the product, we'll be able to not only accelerate all of that growth, but perhaps even do more from a margin perspective, et cetera. So anyway, all to say, the industrial logic of it, we've run the test, we've kind of demonstrated and have all the proof points that it works, and so it just made sense. It was just another step in the journey of adding the product and services to the mix that our clients are already buying. And again, you go back to 98% of our clients have 100 employees and less. This isn't the Fortune 500 or the Fortune 200. These are businesses. They need payroll, they need payment processing, they need insurance, they need cybersecurity, they need wealth management. They need all these things. They're buying them today, and increasingly, as we've done all the surveying and so forth, their bias by far is they'd prefer to get all those product and services from one party if they can.
Right.
And
Right.
just the fact is, there's very few companies that are actually bringing all of those solutions under one roof. And so, all to say, it's what we told everybody we're going to start doing 2 years ago. We're now, been doing it for 2 years, now doing it under something we actually own in terms of the product and service itself. And so, it's a very strategic in terms of what it represents, and from the outside looking in, it may not, it may seem that it was off message, but if you've actually been around the company and certainly investors, this is exactly the message that we've been sharing for the last 2 years about what makes sense. And broadening the TAM, our total addressable market, is something we're highly intentional about and purposeful. It's what we told people we're going to go do, and so our investors get it and understand it completely. So it's been kind of a fun thing. Again, we didn't think it was all going to happen in a 2 week period, but both happened inside of 2 weeks.
Yeah, no, fascinating. And I know you were, very much working on the capital raise for a while. And, like I said, everybody, it's not like pushing a button, and
Nope.
especially in this environment when these interest rates have gone up, which, in talking about the interest rates, really what it's done to the values. And I'm not talking about the values at your level, the peer group level of yours, the multi-billion-dollar companies, but the values of the deals, the day-to-day deals that we do hasn't really changed the values. It's changed the selectivity of
Yeah.
how people use their
Yeah.
cash
Yeah.
because it's so hard to get it. They don't want to eat up their debt because it's hard to get it. As obviously you've been involved with having to add more and more. As the interest rates stay high, it makes it more difficult. So it's been interesting that you were able to work that through and get that. And I know that you're committed to the deleverage as well as the continuing to grow the company. And Heartland is obviously a product of that.
Yeah.
So congratulations on that, Greg. Once again, adding another thing, like you talked about, all these other arrows in the quiver. Now, 5 years ago, even 6, 7 years ago, if you talked about wealth management with anybody, in the insurance business, they were so scared of it. Oh no, the compliance, the SEC. Now if you don't have it, you're not competitive. Just like years ago, if you were only a retailer, you could never be a wholesaler, right?
Yeah.
And now, if you're not both, you're not competitive. So you almost have to be everything to everyone. It's full financial services coming together, and I think you've been, a significant model of that. As people continue to follow what folks like yourself and some of the other large ones are doing. So it's been unbelievable. Greg, obviously the big question always for everybody is, as these things go, and we're out there selling these to people all day long about how these privately held companies with this alignment. And the alignments is the key word, like you said. And like I said, you really were the one I think that really pitched the alignment better than anyone, even though there was a couple few before you that technically that started out. And listen, they're great companies. I mean, Alliant was the poster child
Yeah.
of the private equity and the flips. So they must have had at least 5 or so flips, and great people, great company, assured a little bit before you. But you, I think, were the guy that really created the alignment. You were the guy that got the attention of the entrepreneur. Okay, how you were going to use the equity. But we pitched to these folks all day long that this equity is the secret sauce, the gift that keeps on giving,
Yeah.
the purchase price that never ends.
Yeah.
These are a couple of my quotes, Greg.
Yeah. No,
I find people using them sometimes. I'm not patenting them, but basically those are some of the things that when I pitch, that we tell these people. So they're really into it because they have a big brother that brings them other things that they may not have. It translates some of their equity into your equity, but obviously the equity is as good as the liquidity of it, right? And everyone goes into these things and says, hey, how's it going to work? And they just think it's like a crystal ball and, 3 years, 5 years, here it comes and it's going to happen. Times have changed drastically. You got to be an opportunist. You got to be smart. Sometimes it's sooner. That's why I appreciate what you're saying, about time frames and everything else. I tell people, yeah, what we have done and what has happened doesn't necessarily mean what's going to happen in the future. You don't control certain things in the market, but it sounds like you're really staying the course for what you want to do. You've never varied from your plan. You're very innovative, Greg, and people have followed this model tremendously. All right. But the bottom line is, I'm sure, if anybody that watches this or any of your shareholders, they want to know what's next for Acrisure. I know you can't pinpoint it and nobody's asking you to, but I'd be remiss not to ask the $64,000 question. What do you think, the next event's going to be? And I know you can't say one way or the other specifically, but I know you are working towards that. I mean, I think people want to know that.
Yeah. Well, I think, I mean, all of this time from the capital raise we just did to, other things that we've invested in the past, the integration consolidation that we've done, the brand building that we've done, all of those things. And that people think about all this as, North America. For us, it's in 23 countries. And so, so
Right.
you look at all that. I mean, it's even bigger than what you think in terms of the effort and so forth that's behind it. But all of that's done to put us in a place to build the company that we know that we can go build, to scale something in terms of having a total addressable market that others aren't even thinking about, to have a technology capability that others do not have. It's highly differentiated and going to get even more differentiated as time goes on. You look at all those things, and it really is truthfully to give us, I'll just go back to those two words: preserve optionality. And we can stay private if we want to, go public at some point if we want to. And 2 years ago we couldn't have said that. And so as you look at all of this, and I think the market is probably coming our way in the sense of how what we're preserving ourselves for in terms of those options. A scaled platform like this, I think is something that people will be, excited about if, in fact, we decide at some point to go into the public markets. But anyway, all to say, without because I can't put too fine a point on it, but all to say, we've intentionally and purposely been thoughtful about stay the course where we are, private, go public, and what that means. And the good news is, I control the board. We've got two investors on the board with one vote each. I've got the third board seat with three votes. So when we pull the trigger, if and I should say if and when we pull the trigger, I get to decide that. That's the beauty of this is that we don't have any investor determining when we're going to do something or how we're going to do something. At the end of the day, the 73% of the people that own this business that work in it every day, the employees, we own and control that. And I happen to be the one who's casting the vote, but I look at it as I'm casting that vote on behalf of those 73% of the shareholders. And so, all to say, we've been very intentional and purposeful around it. We've invested a lot of money to make sure we've got those options. And at some point, we'll face that decision, and we'll do what we think is the right thing at the right time. And in the meantime, we're just going to keep our head down and keep working.
I know you will, Greg. I mean, it's interesting that you say that because you probably are the only one that I know of that's privately held that does control the board
Yeah,
and does control it. I mean, I don't know anyone else. There's some that are, they can't go to the bathroom without asking their private equity. Okay. There's others that have built some trust, but when things get too large, the private equity really weighs in. And the bigger problem with the private equity, and look, I brought a ton of private equity money into this space, and we love working with private equity. We're pro private equity,
yeah,
but a lot of this is all about people when you break it down,
yeah,
right? And you've always been about the people.
yeah,
You've always been about the shareholder. You've always been that way, and that's why I point out the alignment. And like I said, last thing I'm trying to do is put anybody on the spot here because I ask the same question to everybody that's going to be on
sure.
this podcast as CEO, just out of curiosity, and I'm invested with you.
Yeah,
So I'm pro. I haven't taken a dime out of Acrisure, even though the one thing you have done that I think was very smart is you have an internal mechanism for people to liquidate if they like amongst
yeah,
themselves. You have an internal
exchange.
piece that exchange, which is great. I don't think anyone else is doing that either. But there's very few people that are in your position, if anyone, that control the board. Most of them are beholden to these private equities. But getting back to what I was saying, the only thing that bothers me about the private equity is they really aren't there on the front line when the people are meeting the people that you're bringing in. It's all about the people.
Yeah,
People buy people. They don't buy
yeah.
businesses,
No,
right?
exactly
And
right.
and when you look at it, they're making judgments on spreadsheets and Sims and everything else, and they don't really meet the people. And that's the one disconnect that I have for people that the private equities probably have too much involvement in their
Yeah,
investments than they should. And I think, Greg, to your credit, and I say this, super favorably and admirably, you were probably the one guy or one of the only guys that stood up to private equity and said, no, this is the way I want to do. And that's why you did the management buyout. That's why you did the things you do, not because you wanted your ego was too big to do it. You just felt that you had a different path that you've taken, and certainly it hasn't hurt the growth. You're continuing to ride the train, and I'm very confident, and I never bet against you, Greg. Okay, that you'll get to the point where you find the right next path, and I believe if there's anybody that's going to stay the course, it's going to be you, that you're going to stay the course and get it the way you want it. And people are going to be very happy about it, and, patience is a virtue, as they say.
It is. Well,
Um,
yeah, it's interesting you say that because it goes back to 2016. So now almost 9 years it controlled the board because we did the management buyout in November of 16. So in November of this year, it'll be 9 years. But, I did that back then. And fortunately had, great partners in Avery at the time. And that flipped into Blackstone and Blackstone to BDT and now to, BDT, Bain and others. Um, that they've all recognized, what I was selling back in 2016. Look, I want to build the company that I want to build, and I want you to get a great financial return. But I want to build the company that I want to build, and I think what I want to build and what we'll go do will be different than if you control this. And I think it's absolutely proven out to be true because you go back to 2020 and that $400 million investment in that AI platform. um, I mean, I can tell you that if I didn't control the board, that transaction would not have gotten done. And and
right.
and so I use that as an example all the time. As that's the wisdom, or where you see the wisdom, to the extent you want to call it that, of having the people that own the business, that own the majority of it, working it every single day, also control the board. That's where you see it all play out. I mean, the product and services that we're offering today as a company would be dramatically different if it was investor owned and controlled. I shouldn't say investor owned, investor controlled at the board level. So, all to say, now my investors, because they might be listening to this too at some point in time, I've been very, very, very blessed and very fortunate to have fantastic partners all along the way. Jenstar to Abry to Blackstone to BDT and Bain and others that are all in it today. They do get the vision. They've invested in the vision. They've not tried to change the model or the governance structure of the business in terms of who's got control of the board. And they, really, there's guardrails, just like everybody else has got guardrails. We got some guardrails, but I do get to control the thing. And so that's been a huge differentiator for us. And frankly, it's even been a differentiator in M&A, because I can go into a room with someone and say, look, somebody can tell you, what they think the business is going to look like 3 or 4 years from now. I can actually tell you what it's going to do because I control it. And as you know, that's played out in M&A circles. I can tell you it's played out around the globe as well in terms of who's got board control. Someone like myself or an investor, that's absolutely helped us build the business that we enjoy today. So it's all of those things have been, they feel like they're nuanced, but they're big. And when you start stacking them up,
Huge compared to what you see now, because it doesn't matter. And I tell everybody, people say, "Oh, well, I want someone to just give me a minority investment." I said, "Well, that doesn't mean, okay, that you control
yeah,
anything.
yeah,
Okay, that's just the economics, right,
yeah,
of how you break it up. Because if a private equity has, even if they have minority investment in it, or they dilute down to minority, right? When Genstar exited, they started at 80%, they were about 25%, right? But they made 11 and a half times their money,
yeah. They
okay,
did.
in
They
three
did pretty
years.
well. So
Yeah, they did pretty damn well. So my point is that I tell people, I said, it's the governing rights, right? And that's the board level, right? So if you've been the only one that can control the board, which is pretty amazing considering most private equities, would not let that happen. But, you did that early on. You saw the vision, what you wanted to do, and you did that, and you stood by it, just like you're going to stand by what you're going to do with this company, which, Greg, I admire. We're great friends. Like I said, as we get older, you start looking back at all the successes. This has been a great relationship. I admire you. I respect you as no other. And, it's really, you helped me and you helped my company really do things to where got us to where we are today. And I thank you for that.
Well, Al, thank you. I'll reciprocate and say the same. Is that I mean, when you called about doing this, because I say no, 9 out of 10 times to these things, and but when you called, I knew this was going to be a trip down memory lane, and the fond memories, they're all fond, and we've enjoyed it. We built our company together, really, and helped each other do what we've done, which is pretty cool. And yeah, we are the same age, and maybe the back nine. I like to think we're still in the early part of the back nine, but at the end of the day, it's been a lot of fun, and you're a part of that, and I owe you a big thank you and a debt of gratitude. Just the things that you've done. You've been a great friend over the years as well. So thank you so much for everything you've done. And this isn't. It is still the back nine. We're still playing. So we'll have some more things to do together.
I'm so glad we got a chance to do this with each other. And once again, thanks for your time today.
Yeah, well, likewise, Al. Thank you so much. Appreciate it. I enjoyed it.
All opinions expressed by the hosts and guests are their own and are not necessarily those of Sica Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sica Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sica Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others. For more information about your unique situation, please contact Sica Fletcher or visit us at www.sicafletcher.com.